Opendoor stock has been anything but boring lately. After a sharp rally that caught the attention of retail traders and institutions alike, shares have pulled back to around the $1.80 range. And now, with earnings just days away, the question becomes, was that rally a fluke, or was it a preview of something much bigger on the horizon? The market's attention has shifted elsewhere over the past few days, but there's a strange sense of calm hanging over Opendoor right now. Like the kind of quiet that happens before a storm. Or in this case, maybe before a surprise pop. One of the most interesting things that happened recently with Opendoor wasn't even about price action. It was the company's decision to postpone its shareholder vote on a reverse stock split. That might not sound like much on the surface, but for those of us watching closely, it raised some eyebrows, and in a good way. Because here's the thing, Opendoor didn't cancel the vote. They postponed it. That means the board could have gone ahead with a reverse split, likely to regain Nasdaq compliance, but they chose not to. That decision suggests something that could be far more bullish than the market is currently pricing in. It suggests confidence. Confidence in what, though? That's the real question. And the most logical answer is confidence in what's coming in the next earnings report. Now, let's not kid ourselves. Opendoor is not some picture-perfect blue-chip stock. It's volatile. It's experimental. It's disruptive. And yeah, it has a long road to profitability. But there are signs, quiet ones, that things might actually be turning the corner. That maybe, just maybe, Opendoor is starting to figure this out. For one, we know the real estate market is showing signs of stabilization. Interest rates, while still elevated, have stopped surging. Inventory is tight, which actually benefits companies like Opendoor that can turn homes faster than traditional sellers. And consumer demand, while cautious, is beginning to thaw in certain markets. In that kind of environment, a company that's optimized for speed and tech-driven efficiencies might have a shot at pulling off something that many thought was impossible just a few quarters ago, delivering solid, even profitable, results. There's also a broader narrative forming around Opendoor that's worth paying attention to. EMJ Capital's Eric Jackson, for example, recently said that Opendoor could be a 100-bagger stock. That sounds crazy until you hear his reasoning. He believes Opendoor is a pure-play disruptor in a market that's historically been stuck in the past. Think about it. Buying or selling a home hasn't really changed in decades. It's slow. It's expensive. It's full of friction. Opendoor is trying to solve all of that. And while they haven't nailed the formula yet, their tech infrastructure, data capabilities, and learning curve give them a serious edge over time. But here's where it gets even more interesting. What if the company is already starting to see the benefits of its restructuring? What if Q2 results show narrowing losses, or better yet, a small profit? That's not out of the question. In fact, there's been speculation that we could see positive EBITDA this quarter, something that would be a major milestone in the company's journey. And that takes us right back to the reverse split delay. Because if you're a board member, and you know the upcoming numbers are strong, or at least stronger than expected, why rush into a reverse split? Why signal desperation when you might be holding better cards than anyone thinks? You don't. You wait. You give the numbers a chance to speak for themselves. That's what makes this delay feel strategic, not passive. Now, I'm not saying to go all in on Opendoor. This isn't financial advice, and you should always do your own research. But I'm saying there's something happening beneath the surface. Something that could catch the market off guard. Let's also not forget the meme stock angle. Whether you love it or hate it, retail interest has been surging across a number of names, and Opendoor got swept up in that momentum recently. That kind of retail power doesn't just disappear. It hides. It watches. And if this stock starts to run again, whether because of short interest, an option squeeze, or just a good earnings report, you better believe retail traders will jump back in. That kind of short-term fuel combined with a longer-term improvement in fundamentals is what can really move a stock. And with Opendoor, we might be getting closer to that intersection than most people realize. Of course, there are still risks. Housing market softness could return. Consumer sentiment is fragile. And Opendoor's model, while promising, hasn't proven it can scale profitably across all markets. But this is the kind of company that doesn't need perfection to surprise investors. All it needs is a signal that the worst is behind them, and the path forward is clearer. We might get that signal in just a few days. And heading into Friday's trade, that possibility alone could start to shift sentiment again. It may not explode right away. In fact, Friday could be quiet. But if earnings are even modestly positive, if they show meaningful operational improvements, or if they beat expectations on the top or bottom line, this stock could catch fire again. So what should you watch for? First, pre-market volume. If we see an uptick, that could indicate positioning ahead of earnings. Second, options activity. Spikes in call volume could suggest speculative bullish bets. And third, any commentary from analysts or insiders, because if someone credible steps in with a revised outlook, that could add more fuel to the fire. In short, Opendoor is at a crossroads. On one side, it's a battered stock coming off a volatile run, facing a skeptical market. On the other side, it's a company that's made strategic decisions, postponed a reverse split, and could be on the cusp of showing real improvement. Friday's trade won't decide the story, but it could hint at the next chapter. This is a stock where surprises happen, where sentiment flips fast, and where just one earnings beat could turn heads in a big way. I'm not betting the farm on it, but I'm watching closely and staying open to what might come next. If you're a believer in innovation, disruption, and the idea that legacy industries are ripe for change, then Opendoor deserves a spot on your radar. The story isn't over. In fact, it may just be getting interesting. So that's where things stand heading into Friday's session. Opendoor is consolidating. The board is sending subtle signals of confidence. The earnings calendar is ticking, and the sector is slowly recovering. It might not feel like much is happening right now, but don't let the quiet fool you. This calm might not last long. Thanks for tuning in. Stay sharp, stay skeptical, but don't ignore the signs when they start stacking up.